Okay, everyone, welcome. Let's get right into the stock charts. We're going to use technical analysis to try to find some trade ideas that make some money. So we'll start out here with Nasdaq futures. Here's the pattern we got going on. Bearish rising wedge right there. See it? Pretty clean and clear. And that's on the hourly chart. We have, if we roll out to the daily, we've got negative divergence right there. See it right there? So we have a slightly new marginal high right now in triple Qs and the Nasdaq futures, and we have negative divergence. We've got a bearish pattern. We're just waiting for this bearish pattern to break. You can see today they overshot it just a little bit, made it look like it was going to rip to the upside, but then that sense failed and we've come down. So again, I'm not interested in I'm not interested in a short until we get some sort of an impulsive breakdown from this pattern, but I think it's coming, and the chart tells me that. Let's look at the triple Qs. Same deal here. Triple Qs. Let's get rid of this one. You can see here on the triple Qs, hourly negative divergence, basically right there. See how we're losing momentum in the hourly chart, and yet price continues to grind higher on super low volume. Look at this declining volume here. Boom. So volume is just dropping off. Momentum is starting to decline. And we have a bearish rising wedge pattern. So looks like we're going to get a breakdown sometime soon. We just got to wait for that sell signal and wait for that bearish breakdown. Here's the S&P ES futures, the S&P futures basically. And you can see here, bearish rising wedge, we're kind of starting to break down. It's not impulsive, so I'm really looking for that impulsive breakdown. You'll know it when you see it. It'll be a flood of selling, and we don't have that yet, so we're just still kind of grinding. We could continue to grind within this bearish rising wedge. On the hourly, negative divergence has really been intact for a while, going all the way back to here, and it's also there on the daily. You can see there's your negative divergence on the daily. Let me mark that out. And, so negative divergence, low volume, bearish patterns, and, to me, tells me we're going to get some sort of a correction or sell signal relatively soon. But again, we got to wait for the sell signal. So every day that we just grind around, I'm going to continue to say probably the same thing. Unless something technically changes, we're waiting for that sell signal. S&P 500, bearish rising wedge right here, negative divergence, waiting for the sell signal. It could come at any minute, could come in a gap down or overnight. Likely that's usually how they like to start it out, is with a gap down, because it's a trap basically. But it could also happen intra-market in a very impulsive move. But again, you got to wait for that impulsive breakdown. And it's important to look at just other things than just the stock market or tech stocks or whatever, or the one stock that you're in that's, up 30%. That doesn't mean the market's going to be up. Here's volatility, UVXY. Look at this hourly chart here. You can see bullish rising, bullish divergence basically. So volatility is starting to become bullish and moving higher. And yet we have a bullish falling wedge pattern. So an impulsive break to the upside would be the buy signal, would be your buy signal on volatility. And again, this is just another thing that the momentum is showing that people are buying volatility here, anticipating a potential correction or breakdown in stocks. Doesn't mean it's going to happen, but that's what this tells me. And so when I see that breakout on volatility, that's essentially your buy signal. You could start to step in early. Again, that's higher risk. So because you don't have that buy signal, stepping in early, anticipating the break higher, comes with higher risk. But obviously, if you're right, you get a better reward. So something to anticipate. Again, everything on this channel is just ideas, my opinions, not trading advice. And one final thing to note is here's TLT. Long-term treasury bonds, bullish divergence on the daily. See how we're moving up in momentum. And we recently just made a slightly new lower low. I mentioned it at the time that this might be a divergent low, and so far we're moving up. So again, bullish momentum still have some bearish price action, but this is telling me that there's likely to be a reversal to the upside. And again, bonds moving higher would be congruent with a sell-off or a correction in the stock market. Gold here. So here's gold bullion ripping to the upside, up 23 bucks today, coming right up into this this downtrend line right here around 1874. So you have to see a breakout of the downtrend line in order to confirm the next buy signal on gold, because this is the trend line that's been in place for this entire downtrend line. We overshot it here, and when it failed, that was a indication to me that we were likely to sell off all the way down to the major support, which was around 1790, and we did. The buyer stepped in there, and here's the buyer. So again, when we were down here, I said this is likely to be support, and so far gold has just been rallying impulsively off of that. So I was correct on that one. And I stepped in and bought Barrett Gold down here when we hit support. And I told everyone for a while when we were all the way up here that if we fell down to 1790, I would be buying my gold miners back. And that's exactly what I did. So moving on, let's look at the dollar. All right, the dollar. So if this turns up here, we have bullish divergence on the dollar. It's a large pattern. You can see here from the lows back here, and we turn up here, this would be a divergent low. The dollar moving higher will likely play out if stocks sell off, or you could say vice versa, if the stocks will sell off if the dollar moves higher. So something to keep an eye on. We also, let me go to the hourly. We also have this downtrend line right here at about 17 or 90.40 or so, which has been holding as support. And I get that back. You got lots of reactions here and another reaction right there. So we could undercut it and make slightly new lows, but if it happens anytime soon, it's likely to be a divergent low. So I don't know. When I look at this, I think the dollar is likely to move higher, at least up to, let's say, 92.10. How's gold going to play out? Well, going back to gold is right there at that resistance line or near it. So maybe gold gets rejected here and makes another move to the downside. I don't exactly know what's going to happen, but that's what I see in the charts. Okay, lots of these stocks that I'm short, they still look like good shorts. They're, grinding against me slightly, but they don't. The technicals still line up for a positive short. So here's an example. PayPal, just grinding around. You can see here that it's really gone nowhere. And if you look at the daily here, we haven't gone anywhere since basically this for about a week or so. We've really gone nowhere. And so we are setting up to the downside is what I see. We've got big negative divergence that's in play. Each one of these new highs has been a divergent high. So that tells me that this trend, this is a topping trend, and it's likely to break to the downside and start a new downtrend. And I think 129.27 is going to get filled. I really do. So again, I'm still short here. Why am I still short? Well, negative divergence is still there on the daily. Nothing's changed there. We're kind of grinding around. We have negative divergence on the hourly right there. This was a new high with a divergent low. So basically negative divergence there. And we've gone nowhere really since. So we can continue to kind of grind and pop higher, marginal new highs. And then I think likely you're going to get a gap down or a big break. It's going to wipe out all these little highs that it's been making recently. So I'm still short on that one. Still looks good. Let's look at NVDA. NVIDIA, same thing. It's flat today. PayPal's down slightly. NVIDIA's flat. Nothing's really changed. Grinding up this little uptrend line. Here's what NVIDIA's been doing. It's been making a series. Here's an uptrend. Here's another uptrend. But in general, if you take all that away and we just hide this, we've gone nowhere for really since September. The thing's just gone sideways since September. And if you look at the daily chart, it's, the momentum has continued to drop off and create negative divergence, basically. So we've gone nowhere. We have negative divergence, and I think it's likely we get a move to the downside. Okay, DraftKings has started to break down. I am short this one as well. And here's what we got on DraftKings. Your daily chart, you had this upward channel right here. And we broke to the downside. That's pretty impulsive. You got 2 days. So as long as we close down here, that's a confirmation candle that we're breaking down. Now we're at support. You know, if you go to the hourly, this is the short-term support right here around 47.75. So likely we'll hold here and go sideways, maybe run up and do a back test. And again, when you trade this style, you have to be willing to accept that stocks can back test your trend line and go against you slightly without, you know, getting spooked out of the trade. And in fact, you know, I typically will add to my short positions when we get back tests of trend lines. Or we could just break down. You know, there's no saying which way we're going to, you know, how it's going to play out. But I still think over the trend or the short-term trend at least, we're heading down. You know, we're going to go down. And where do we go down to? Well, you know, I think it's likely we get down to about this 43.75, but we potentially could get all the way down to this 35.38. We'll have to watch this. And there's also the potential for this head and shoulders pattern here. It's not the cleanest. You've got head and then this right shoulder. So we'll see. There, your neckline is down in this area. This looks like it's heading lower, and it's down by 3% today, and we've broken. I think we're going lower. Okay, Carvana's moving against me a little bit today, but I still am short. Why am I still short? Well, here's the thing. We've got and again, this is an aggressive trade. There's no denying that. But you've got a bearish rising wedge pattern right here. We continue to, let me get rid of that tool. We continue to kind of walk up this wedge. So we keep hitting resistance and getting rejected. And today they're just popping it up into resistance again. I think it's likely, even if tomorrow, let's say they gap it up, maybe around, this 271 area, gap it up there, I think it's likely it's going to sell off right there, and that's going to be the high of this move, and then we're going to start to break down. Because we have negative divergence, the high today is a divergent high, another divergent high coming into resistance. Here's your RSI right here. We continue to make lower and lower momentum. And so I think it's likely we break down. So I'm looking for opportunities to potentially add a little bit more to this short position and bring it up to a full-size position. Again, when I start my short positions, I don't typically just instantly take a full-size position unless I'm getting some sort of a impulsive breakdown. But if I'm trading like this, where I'm trading this wedge pattern and I keep shorting it at resistance, I take a starter short, I add to it, you add to it, you add to it, until you get up to a full-size position. What's a full-size position? Well, it's different for each person, each person has their own position, but, it shouldn't be 50% of your portfolio. You should keep it something reasonable that if you're wrong on the trade, it doesn't just knock out all your gains on other trades that you've been right on. So keep that in mind. Money management is important. Okay, SQ, here's the daily. This thing's just been making a series of small little uptrends, selling off, uptrend, uptrend. Here's another one. But big negative daily divergence. And each one of these uptrends has been a divergent high. So I think it's likely we sell off. We're potentially making this bearish rising wedge pattern. I haven't quite marked it out because it's not the cleanest. But maybe it's something like this, So, again, it's not the cleanest, so I haven't marked it out. I'm just watching for this trend that we're in right now, going to the hourly, this uptrend line right here, to break. I'm looking for some sort of a sell signal. The negative divergence tells me that it's coming. And this one has been your sell signal on SQ was really back here, down at 161. And yeah, they've moved it against you. If you took that, you're down about 30% on the trade. So, the breakdown hasn't fully played out, but it has continued to build this negative divergence. So it's telling me that this big daily pattern, that there's likely to be a change in trend, not just a pullback on an uptrend like we are seeing now, but potentially a new downtrend where we make lower lows and lower highs and move down. So watching that. KBBY. This one's continuing to work to the downside. It's impulsively selling off. So you can see we broke the trend on this gap down right here. We had negative divergence in play, and it's basically continuing to work its way down. So you can see here, we got a gap right here. Looks like we're heading to gap fill. I don't think we're going to do it all at once. It's usually these things don't just run down and fill the gap. I think what's more likely is we get some sort of a bounce. It looks like right around here, but we'll see. Maybe into the close, they buy this up and recover it back at this 104 area, and then you get the impulsive bounce higher. Then that sells off and works its way down to fill the gap. But again, watch the price action. Okay, Snap. This one's going against me as well, and you can see here I took the short right up in this area right here, I believe. But we've got negative divergence on the hourly. We've got negative divergence on the daily right there. And we continue to kind of walk ourselves higher in this bearish rising wedge pattern. We're at a really low probability area that this to me looks like a false breakout. So I think it's likely that SQ sells off, Snap sells off right here, gaps down tomorrow or something like that. And we head down towards the bottom of this wedge and ultimately break down, break the wedge and start to, and move towards filling this gap at 29 bucks. So from where we're at now down there, that's a move of about 40%. That's what I think that's what the chart tells me this is going to do. It hasn't done it yet. We haven't broken down, but that's what I think is happening in this thing. It's just a matter of how long do they grind it around up here, making new slightly higher highs. Because that's what can happen. They can sit there and move it higher and continue to kind of grind it a little bit higher and inch by inch. And then one day you wake up and it's gapped down a huge gap and it just wipes out all the gains. That's what I think is going to happen in this. NEO, they moved it higher today. But the thing is, we're making a series of lower lows. So you can see we're downtrending basically. Lower highs and lower lows is what we're making. So here's your uptrend. Yes, NEO has been in an uptrend. And there's your uptrend right there. But we broke impulsively. See that breakdown candle? We broke. We had further selling. And so to me, this looks like, just a daily bounce on our way down to this trend line. I don't know when we're going to get there. But it looks like we're heading down to this trend line, and then I would expect we're probably going to break that trend line. But at first up, let's just get down to the trend line. That's kind of the first part of the trade. And I'm really watching this FedEx closely. This is a nice setup, nice pattern. Bearish rising wedge right here, pretty clean. Negative divergence on the hourly. You can see it right there. Now, negative divergence on the hourly, I like to see that, but I really like to see it on the daily. It's important for swing trading to see it on the daily, not just the hourly. The hourly is usually good for a small move. The daily is good for a much bigger move. And clearly you still have it. So even if this thing continues to move higher in the short term and really continues to coil within this wedge, it's still going to be a divergent high. Every move higher from here is a divergent high in the short term. Unless we go a long ways, quite a ways up and burn through the divergence, all these new highs are going to be divergent high. And that's why the stock's struggling. It's basically flat today, and it's just grinding higher, just inching up little by little, and then you get, and then likely you're going to get a breakdown or a sell signal, and it's going to wipe out a lot of these gains. So I'm watching that. I'm waiting and kind of watching for that one. Okay, that's all I got for today. Nothing else really seems too interesting. It's kind of a continuation of Friday, just a grind day. And so I just want to point those things out, get everyone prepped and set up for the potentials to happen. And then when they do, or if they do, we'll all be able to take action on it. So thank you. Catch you guys on the next one.